So this is our last video in the tax law legal research module, and we're going to talk about administrative documents. There's a lot of different documents issued by the IRS. The one with the largest weight of authority is your Treasury regulations here in a nice big font. And in a somewhat smaller font, but still pretty big, we have the next things in line: revenue procedures, notices and announcements, and revenue rulings. And we have some items that are of lesser authority, and we're going to talk about these in more detail. Okay, so the first video we talked about Treasury regulations, and we discussed that final regulations and temporary regulations are binding. You could cite these in order to argue whether a tax is owed. Proposed regulations are not binding unless they're earmarked as reliance regulations. So Treasury regulations are not only in the Federal Register and codified into the Code of Federal Regulations, but they are also issued in a weekly publication called the Internal Revenue Bulletin. So the Internal Revenue Bulletin, it includes Treasury decisions, another name for regulations. Here's a temporary regulation, as well as the Internal Revenue Bulletin also includes notices, revenue procedures, and revenue rulings and announcements. These Internal Revenue Bulletins are accumulated into volumes called the Cumulative Bulletin, although the IRS no longer publishes a Cumulative Bulletin. But just so you know what this thing is, in case you see a citation to it. It's important to know about the Internal Revenue Bulletin, not only because it's sort of a weekly update service for you, but in the weight of authority, things that are published in the Internal Revenue Bulletin have a pretty high weight of authority. First, of course, we have our Internal Revenue Code, followed by Treasury regulations, which are legally binding if they are final or temporary regulations. And then the next in line are these items published in the Internal Revenue Bulletin: revenue rulings, revenue procedures, notices, and announcements. These items are also known as IRS positions. IRS positions have a high weight of authority. You can cite them in determining whether a tax is owed. And that's your revenue rulings, procedures, and notices and announcements. So what's a revenue ruling? A revenue ruling is an official interpretation by the IRS of the Internal Revenue Code, regulations, etc. These are issued by the Internal Revenue Service. They are not something that a taxpayer requests and that a taxpayer is basing their own fact situation on. They're totally generated by the IRS. They provide guidance to taxpayers as well as IRS personnel, and you can use them in arguing whether a tax is owed. So here we have an example of a revenue ruling before the U.S. Supreme Court decided that same-sex marriage is going to be valid in every state. This is back in 2013. The IRS made a revenue ruling here that if a couple was married in a state where same-sex marriage is valid, but lived in a state where it was not, the IRS was going to recognize that marriage. So there's an example of something that a revenue ruling was issued for. Something that's maybe somewhat more common revenue ruling, maybe a more typical example of a revenue ruling. This revenue ruling deals with when employers pay active duty service members the difference between what the federal government pays them for their active service and what the employer normally pays them. The ruling contains a statement of issues. We see the issues up here, such as how to calculate the amount of income taxes withheld on the differential wage payments. And then we have a short statement of facts, as well as law and analysis. Okay, so what is a revenue procedure? As you can imagine from the name, this is an IRS position on how certain procedures should be conducted, such as filing a tax return. And these may be relied upon by the taxpayer. So here's an example of a revenue procedure. In this particular revenue procedure, we have this situation where spouses jointly file, but one spouse would like relief to be granted to them for a non-payment of tax. So the IRS puts together a list of things that the IRS employees should consider. Are the spouses divorced? Is there economic hardship on the spouse? Did the spouse not really know what was being filed in their tax return? They had no knowledge of it. Are they being abused by the other spouse? Do they have a legal obligation to pay, or does only the other spouse have a legal obligation to pay that tax somehow? Did the spouse benefit from the unpaid tax? And is the spouse asking for relief have some kind of mental or physical problem or disability that would prevent them from what's really going on with their taxes? So that's a revenue procedure that tells, in this procedural situation, how the IRS should interpret whether relief should be granted to the other spouse or not. And revenue procedures, as well as revenue rulings, can be key cited or shepherdized to see if there's anything superseding them and to see whether there's still good law. For example, the revenue procedure that we just saw, 2013-34, that in fact superseded an earlier revenue procedure, 2003-61. So notices and announcements. So what are those? Notices deal with substantive or procedural guidance on an expedited basis. Announcements have only short-term value, and they might deal with something such as an approaching deadline. And taxpayers can rely on both notices and announcements issued by the IRS. Here's an example of a notice. There was a credit given under Section 30D of the Internal Revenue Code for plug-in electric vehicles, and there was some question over whether a golf cart or certain types of golf cart could receive that tax credit if somebody purchased a golf cart. What the notice does is it sets forth a process for manufacturers of golf carts to certify to the IRS that a particular vehicle meets the requirements of the section and that the purchaser of this vehicle can in fact get the tax credit. So again, we see here that this notice, if you shepherdize it, it was superseded by a later notice. So you want to be sure and shepherdize or key cite your notices. Another example of a notice, I think this is pretty interesting, and I think they might issue a similar notice every year, but this notice 2007-30 lists 40 frivolous positions that will subject taxpayers to a penalty if you take that position on your tax return. So that's an important notice to pay attention to. So here's an example of an announcement. So this is an announcement of the extension of test for arbitration procedure for appeals. So this announcement can be relied upon by the taxpayer. Okay, so we looked at various IRS positions, and we considered that these positions have a relatively high weight of authority. The next type of documents that we're going to talk about are letter rulings. Now, letter rulings have a lower weight of authority. One common type of letter ruling is a private letter ruling. A private letter ruling is requested by a taxpayer. They want to know for their particular fact situation how the tax law is going to apply. Often a taxpayer wants to determine the tax consequences before they actually complete a transaction or before they file a return. Private letter rulings are only binding on taxpayers who requested them. They're useful for guidance of how the IRS might view a particular situation, but they really should not be asserted if you have a brief and you're in tax court. They are not going to have very much weight. Here's an example of a private letter ruling. So we see that this private letter ruling, the name is redacted, the name of the taxpayer is redacted, and this ruling has to do with exclusion of gain from sale of a principal residence. And the taxpayer wants to know whether they can exclude the gain from sale of their condominium. They only lived in the condominium less than 2 years. Normally, to exclude the gain, you have to live in a residence for at least 2 years. But in their particular situation, they had another child and they were living in a very small place, so they had to move out. So here the IRS gives a summary of the fact situation and makes a ruling saying that, well, in the present situation, there were unforeseen circumstances and these taxpayers can exclude the gain. So this applies only to the taxpayers to whom this private letter ruling was issued. Determination letters are much like private letter rulings in that they're a response to a taxpayer question. How they are different is that they are not issued by the national office of the IRS. They're issued by local offices, and they deal with routine matters for which there's clear precedent. Here's an example of a determination letter, and this is a common situation. A finding of tax-exempt status under Section 501c3 is a routine matter often handled by a determination letter. Technical advice memorandum. Instead of a taxpayer asking for advice, this is going to be an IRS official asking for advice. So questions often arise in a proceeding, such as an audit, involving a particular taxpayer. So if there's a technical advice memorandum issued, that advice memorandum is going to apply in that specific situation to that specific taxpayer. So for an example, here we have an IRS agent wanted to know if they could name the taxpayer in the heading of an agency summons, and the IRS said that yes, you could. The IRS is going to follow that, at least as to that particular taxpayer. So moving on to IRS internal documents. Chief Counsel advice. Chief Counsel advice is written by the Office of Chief Counsel. They're directed to IRS employees, and you cannot cite them as authority as to whether a tax is owed or not. Here we have Chief Counsel advice. This Chief Counsel advice actually went against the government and in favor of the taxpayers. It's interpreting particular tax law as to whether independent contractors owe employment taxes, whether somebody is actually considered an independent contractor or an employee such that they owe employment taxes. And this held that direct sellers of consumer products are not employees, whether they sell intangible products or tangible products. So this is an example of your Chief Counsel advice. All right, the Internal Revenue Manual is not mandatory or binding. It gives instructions to IRS employees about the administration and the operation of the IRS. Audit Technique Guides. This informs your IRS examiners about various accounting methods. This is something else that you can't really cite as authority. Actions on decisions. This is a very interesting thing. So when the IRS loses a case, the IRS makes an announcement of whether they're going to acquiesce in the court's decision, acquiesce in results only, or they're not going to acquiesce, or non-acquiescence. Acquiescence means IRS is going to follow the holding of the case. Acquiescence in result only means they're going to follow the result, but the IRS does not agree with the reasoning. Now, non-acquiescence means that the IRS isn't going to follow the court's holding. If it's a United States Court of Appeals decision, the IRS is pretty much forced to follow the holding, but only in that jurisdiction. If the IRS says non-acquiescence, that means in the other appellate jurisdictions, the IRS is not going to follow whatever the Court of Appeals came up with in a particular circuit. Here's an example of an action on decision. It's a non-acquiescence. What happened here is that there is a tax court decision holding that a taxpayer filing as married, filing separate, was entitled to an earned income tax credit. The IRS did not acquiesce because Internal Revenue Code Section 32D specifically prohibits married, filing separate taxpayers from getting that particular credit. So it said because that tax court, for whatever reason, did not follow the code section itself, the IRS was not going to follow that tax court memo. Just to recap at the end, as far as our weight of authority, these items listed here, documents issued by the IRS that have a low weight of authority, you shouldn't really cite these as to whether a tax is owed. So we have our letter rulings, internal documents, and IRS forms and publications. And here's our weight of authority pyramid. Your items, your IRS pronouncements, those have the next authority after your regulations. Written determinations have slightly more weight than other things such as forms. Written determinations such as private letter rulings and technical advice memorandum. However, every single thing we talked about can be used as a defense to an Internal Revenue Code's Section 662 penalty for significant understatement of income tax liability. So that includes not only your big weighty things like your Internal Revenue Code and your regulations, but also things like the Blue Book, not the citation manual, but the one that's issued by the Joint Committee on Taxation. Things like committee reports, private letter rulings, technical advice memorandum. You can cite all of these to say that you do not owe a penalty. What about IRS forms and publications? Those are at the bottom of your authority pyramid. Can you rely on those to avoid a penalty? Probably. If you look at this section in the tax management portfolio, it says that you can. And it seems pretty reasonable that the IRS, they issue these forms and publications, and they should really expect people to rely on them. And here's some credits for my sources. And if you have any questions, please contact me. And now you can move on to the last assignment in the module.